3 minutes left of trade. We've slipped just a little bit as we approach the close, but as you can see, all four of the indices nicely higher. The Nasdaq still holding on to a full percent of gains. Let's look at the intraday chart for these markets. As you can see with the S&P, a fractionally red open, but then a very nice first couple hours of trade took us to the highs of the days, and most of the afternoon we stayed there. We've just sold off a little bit as we approach the close. If we look at the sectors, all of them in the green, despite that slight slippage, as we approach the close. There we have at the top, healthcare led up by Biogen at 1.5%. Tech is up over 1%. Consumer discretionary doing well. Right at the bottom is consumer staples and telecoms, but as I said, they're both up nicely. Let's have a look at the S&P 500 for the week. We started the week a little bit soft. Of course, no trade or shortened trade during Tuesday, no trade on Wednesday, and we've gained nicely at the end of the week. So decent returns for the week. And there are the sectors for the week. Only one in the red, energy, but it soared the prior week. The best sector performance is healthcare, up 3% for the week. Utilities up 2.4%. Bob Pisani joins me now. I mean, pretty strong end to the week, pretty
very
encouraging.
Impressive. And I want to show the VIX, the volatility index, the fear index. 8:30 a.m. Of course, we got the jobs report, good numbers, wage growth, but not big wage growth. Look at that. It collapsed right at 8:30. That's a sign the market was greatly relieved. We use this word Goldilocks too much here, but the market's telling you they really liked what the report had to say. That's the best news that we've had this week. Other than that, Wilfred, the mover of sentiment has been trade wars and trade issues, and you can see this here. What did not perform this week? We're up 1.5% on the S&P. Material stocks, industrial stocks, again, underperformed. Most of the big names like Caterpillar were flat on the week. Sorry to put all the various charts up there. It's confusing. But the bottom line is the trade-sensitive stuff here, materials and industrials, dramatically underperformed the market once again. And I anticipate that will continue as this plays out.
Bob, let's have a look at the 10-year for the week as a whole, because a lot of data coming out this week. Of course, the jobs in particular today, but didn't really make too much difference on the 10-year. Didn't really change Fed expectations that much.
No, and I think the important thing here is that spread, that 30 basis point spread between the 2 and the 10-year yields. You're going to be very busy talking about that next week when the banks start reporting on Friday. That's going to be the key story.
Friday the 13th, no less.
Yes, that's when JP Morgan starts reporting, and of course all the banks. Wilfred covers that here for us. And the important thing here is we are essentially one rate hike away from a flat and then an inverted yield curve, unless the 10-year starts moving up. My hope is that if the trade war issues go away a little bit, global economy stabilizes a little, because you've seen, and we've been reporting, how the global economy is looking a little more rocky with the trade war issues. I'm hoping if we get the trade war issues resolved, the 10-year yield will move up, that spread will widen, and the banks will do better.
Bob, very quickly, volumes this week?
Volumes were typically muted for the week. That's not surprising.
Nonetheless, an encouraging finish for the session and for the week. We're up 103 points on the Dow. The Nasdaq leads the charge up over 1%.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.